What is up? Steve here. I hope you are doing well. If you have not heard yet, mortgage rates skyrocketed, and I believe that there's big opportunity to come for all of us. Later on in this video, I'm going to talk about some of the things that you guys can prepare for this opportunity or opportunities in the housing market. But I believe the housing market is only going to get worse. But we're going to talk about some topics associated with what's going on with mortgage rates. But if you haven't heard, they jumped up, according to Mortgage News Daily, to 6.18%. Now, what they do is they average it out, assuming that taking in consideration any kind of upfront closing costs for mortgage rates. So they, May 26th, which was 19 days ago, mortgage rates were at 5.25%. I mean, that's a considerable jump, and it's going to have a major devastation for anybody buying real estate right now. And sellers are going to freak out because the pool of buyers is contracting. They are leaving in droves. Real quick, on a $400,000 home at 5.25%, again, 19 days ago, if you were to lock in, that was a payment of $2,208. Today, right now, at 6.18%, you're talking a payment of $2,445. In a 19-day swing, that's a $237 per month more in interest that you'd be paying on that same loan of a $400,000 home. Now, I did another video pertaining to the CPI, which is basically the consumer index for the cost of goods and services and everything else. And last week, they were anticipating that it was going to basically go down from, I think, 8.3%, somewhere around there. And unfortunately, it actually went up to 8.6%. So I'm telling you right now, inflation is here to stay. And everybody, mainstream media is freaking out. Mainstream media is almost trying to dictate what the Fed is going to do. So let me explain. They've already said the Fed is going to increase basically 50 basis points pretty much every meeting until the end of the year. And a lot of talking heads are out there saying that the Fed is possibly going to do 75 basis points. And, even at 75 basis points, it's just not enough to combat inflation. And I think Powell knows it. And I think that he's got to take some drastic measures and just needs to basically push us into a recession, get this ball rolling. And the quicker we get into this, the quicker that we can recover. But what is this going to do for housing? It is only going to make mortgage interest rates rise. Again, 6.18% right now. And I anticipate if we do see the Fed rate hikes of 50 to 75 basis points in the next, I think it's three or four meetings throughout the end of the year. I mean, coming the end of the year or Q1 of 2023, I think we're going to probably be in the eights. Now, I want to touch on something that I hear a lot in the comments is people like, oh, I've had 6% interest rates. It's no big deal. It is a big deal because prices of homes are the highest ever in U.S. history. And one of the first properties I ever bought, my first home, I did have I think it was 6.5% interest rate for a 3-bed, 2-bath, single-family home here in Southwest Florida. But the thing is, I bought it for $120,000. Today, that same house is going to go for probably $350,000, $375,000. So we can't compare apples and apples when we're talking about mortgage rates, let alone what happened in the 80s with really high interest rates going to like 18 to 20%. The price of homes were significantly lower. So we need to basically kind of not compare the two. With the Fed raising rates, this is going to have a negative effect on a lot of other things, which could be more opportunity for you guys. So especially if you guys have the entrepreneurial spirit, but there's not going to be any more cheap debt. I encourage you guys to Google zombie corporations. These are corporations that are essentially insolvent, and without the use of cheap debt, they cannot pay their bills. So as the Fed increases their rates, all of this floating debt and adjustable debt is going to rise as well for a lot of these corporations. And I believe we're seeing some layoffs in certain industries like tech and real estate related, but I think we're going to see massive layoffs, and the bad companies are going to surface. And I think that we're going to see some companies that we thought were strong that are not going to be strong at all, and it's going to surface through the rise of rates. I want to talk about, this is something a lot of people are not talking about, and I'm going to put the link in the description for you guys, but basically this is directly from HUD. Okay. And I think it's important that everybody glances at this because, again, this is something that's not talked about in terms of how this will negatively affect the housing market even further. Just want to talk about some key highlights real quick. New single-family home sales fell 16.6% to 591,000 units. Right now, new construction is hit. I'm getting emails daily from local builders here talking about all these incentives that they have. And I'm hearing about certain builders that have waiting lists. And when inventory is getting ready to CO, these waiting lists, people are really not jumping on the new inventory. And mortgage rates rising is obviously causing an effect on there. Sales of existing homes declined for the third consecutive month. Inventory of home sales rose. Listed inventory of new homes for sale, 444,000 units at the end of April, an increase of 8.3% from March and 40.1% from last year. Forbearances, the share of homeowners with mortgages in forbearance fell. It's down to 473,000 households in April. A lot of these people that are in forbearance, they're going to do modifications of these loans. Some are going to be drawn out to 40 years. And some, even after modification, are just not going to be able to afford it, which I'm going to touch in the next thing in this report. 6.48 million renter households were behind on rental payments. Again, almost 6.5 million people are not current on their rent. We're going to have disgruntled landlords come to market. They're going to bring their inventory to market because they're pissed off. A lot of moratoriums that they were stuck with, especially in certain states, they really got screwed. And I think that a lot of landlords are just pissed, and we're going to see inventory come from landlords, in my opinion. 4.57 million homeowner households were behind on their mortgage. Let me just say that one more time. 4.57 million homeowners were behind on their mortgage payments. And out of that, 920, almost a million people out of that 4.57 million feared foreclosure was imminent in the next 2 months. Again, this is directly from HUD. Okay. If you just type in that headline right there, again, I'll try to put it in the link a little bit later. So check back when you guys can. I'm going to talk about highlights on things that are really negatively affecting the economy. But then again, I'm going to talk about some really big opportunities for all of us to contribute, to partake in. And toward the end, I'm going to just talk about ways that we can all prepare right now, because right now is the time to prepare. Right now, we're not seeing crazy real estate deals. It takes time for real estate to go up and to go down, but things are happening very, very quickly, as mentioned with mortgage rates. A new report came out. Consumer savings is dwindling. More people are putting more and more money on credit card debt because the cost of everything has increased. Credit card debt, forget the stat. I have it messed up here. Anyway, credit card debt is rising just because, the cost of everything. Consumer sentiment, which is how consumers feel about the economy. U.S. index of consumer sentiment is at a current level of 5.2, down from 58.4 last month and down from 85.5 1 year ago. So 1 year ago, 85.5, we're down to 50.2, basically half. People are uncertain, and I'm going to talk about a story too pertaining to gas, somebody pumping their fuel the other day from a post on Facebook, somebody that I know. New construction, new builds on a decline. We already talked about that. Incentives are jumping up. Incentives for real estate agents, they're throwing bonus commissions, everything. They're trying to do everything that they can to sell off inventory. I predict a lot of small builders are going to be stuck holding the bag too. And we're going to probably see a lot of unfinished buildings as well as entire communities. In a recession, there's going to be job loss. And I think that a lot of people are saying, people locked into 2.8%, 30-year fixed, they're fine. But the problem is when people have a job loss or something goes on in their family, they're going to have to sell the property. And a lot of the people that locked in, a year and a half ago at really, really low rates, right now, they do have a decent equity position. I'm not going to discount that at all. They do. But that equity position dwindles down over time if we're in a declining market. And how do we get into a declining market? Simple supply and demand, and high mortgage rates are going to have a big impact on that as well. We talked about it. Inflation, cost of living is skyrocketing. The CPI, I said 8.6%. Peter Schiff, he's a well-known economist, and he's talking the real rate of inflation is 15 to 18 to 20%. I tend to agree. I mean, look at your grocery bills. Do you think it only went up 8.6%? Doubt it. Fuel prices, everybody's feeling it unless you do not leave your house or you don't have a vehicle. So somebody that I know posted a Facebook post, and he said that he pulled up to a fuel pump and there was a lady in front of him. So he's just waiting for her, and she gets out of the car, puts her credit card into the machine. She pumps, and he's like, and then all of a sudden she, puts the thing back. She jumps in her car and she takes off, and he's like, damn, that was really quick. So he pulls up next in line, goes to fuel his tank up, and saw that she put 2 gallons in her tank, and she had it was about $10 expense. That just goes to show people are hurting right now, and they're doing everything they can to pinch pennies and everything else right now. I think a lot of people, this is the first summer coming out of the pandemic. A lot of people this summer are going to be out and about. They're going to be spending money. They're going to be leveraging on credit card. They're just getting it out of their system because they've been cooped up. And I think this summer is going to be, after the summer is going to be kind of end all. And I think a lot of people are we think that the economy is contracting now. I think it's going to be even worse because people can't afford, other things outside of the necessities like fuel and food and everything. If you're taking a look at the stock market, retirement accounts, 401ks, IRAs, some people that were anticipating on retiring, or people that have retired are coming back to work. I think it was over the last 12 months, 1 million retirees came out of retirement and they're back working again. People lost a lot of money recently in stocks and crypto and everything else. I foresee, if you guys are sitting tight and you want the more luxury items, you want, the boat, the RV, everything else, I would say sit tight, because those are the first things that people are going to let go. And some, unfortunately, are going to have them repossessed because they just can't afford them, and they're going to be upside down on those as well. And, we're going to see a big influx of, cars, boats, all the kind of toys out there. I think that we're going to see a big influx. By the way, thank you guys for being here too. I really appreciate it. All right. Before we get to preparation of this new housing market, I want to talk about some of the other sellers that would bring more inventory to market, because yes, our inventory is still relatively low. And I did talk about in the housing report, 4.57 million people are delinquent on their mortgage right now. Obviously, people are going to get, they're going to do modifications. People are going to get back up on their feet. But we're going to have foreclosures come. We're going to have short sales come to market. And especially with people that don't have equity positions. And there's a lot of people that bought in the last, 8 months that their equity position's not necessarily huge, especially in some of the markets that are starting to decline after it peaked. We have 1.7 million new starts going on right now, shovels in the ground, new construction. And I think it's like 40% of those are speculation, meaning the builders do not have a buyer lined up for the purchase of the house in contract, because the builders, they don't know what the cost is going to be associated at the very end when they get close to CO and certificate of occupancy in terms of the cost to build that property. So I think that there's going to be a lot of liquidation for new construction properties. And I think we're going to see a lot of smaller builders go under that we're just not prepared. Institutional investors, I've been talking about this for a while. They do take on debt. They are competing with cash offers, but that cash is backed by debt. And a lot of the debt is floating and it's adjustable. So they might be in a 5 or 7 year adjustable rate for the money that they took, but a lot of them are floating as well. So when these institutional investors, as the cost of debt increases, the yield gets squeezed, and then they're going to get out of those assets. They're going to take their equity position when they sell out. They're going to get out of them, and then they're going to go and get into less risky and safer investments like treasuries or something else that's not as management intensive. So I anticipate we're going to see institutional investors start to sell off real estate probably in the next 12 to 18 months. I talked about the normal cycle of foreclosures, short sales. We also have have-to sellers. These are people that let me touch on something that's might be a little spicy for a lot of people. One of the main reasons for a divorce is because of finances. And unfortunately, a lot of people are financially screwed, and all that does is cause conflict within the family. I do not want any of that happening to you guys. This is one of the reasons why I made this channel, to talk about how to be financially free and everything else. But I can tell you, we're going to see a lot of divorces happen coming into a recession. And unfortunately, it's going to be hard for a lot of people. I know that. We have other have-to sellers. You got job losses, as mentioned. I think that we're going to see a big wave of a lot of companies laying people off, and we're already starting to see it. You have people that have to transfer a job relocation, especially if you lost your job and your skill set is one thing and you got to move to another state or across the country. You're probably going to have to sell that property. And a lot of people just don't want to be landlords either. So, and then you have, I live in Southwest Florida. They call Florida basically the retirement deathbed. Basically, people come here to die. And we do have a big population of older people in Florida, retirees, and it's the natural cycle of people dying off. And then you have other things like, just things going on in the family that people have to sell. So those are going to continue coming to market. I think that a lot of sellers right now, like myself, you have cash out equity sellers that know they're seeing right now that, wow, I could cash out X amount of dollars right now. Also, if it's your primary residence, you could possibly have no taxable event if you've lived there for at least 24 months. Check into that. But I think a lot of sellers right now are like, man, there will be other opportunity to buy property in the future, and maybe I'll cash out right now. So I think, and a lot of investors that bought cash, that true investors that paid cash, I think that we'll start seeing liquidation events going on as well. And then other stuff, people that retire, people that need to downsize, people that are families that are growing, they need to upsize. So all those things taken in consideration. All right, so what can we do to prepare for this new market that's coming? I do not see, we might see some drops here and there in the mortgage interest rates. And I think the jump today at 6.18% was the market preparing for what's to come with the Fed rate hike. I think it happens tomorrow or Thursday. And now they're talking possibly 75 basis points. So I think that they already kind of built that into that rate hike. So, and it's not always guaranteed that you have a Fed rate hike and the mortgage rates go up, but I anticipate mortgage rates are going to continue to go up. It's going to have a negative effect on housing. I think that housing is going to go down. I think we're going to have more inventory. And what happens? The people that are prepared are going to be able to take advantage of opportunity. I think that there's going to be a lot of opportunity coming. And before I get into that, Jamie Dimon, he basically compares the economy as a hurricane coming. Just depends on what kind of category hurricane. Elon Musk has a super bad feeling. Peter Schiff, he thinks we're in a super bubble, an omni bubble. Harry Dent thinks it's going to be the worst housing crash, worse than 2008. And Warren Buffett, there's a reason why he has roughly about 106 billion with Berkshire Hathaway in cash, guys. People say inflation is eroding away cash. Yeah, well, if you had that cash in crypto, what happened? If you had that cash in the stocks, what happened? So they went down way worse than basically cash eroding away. So I think that anybody that's in a good cash position right now is going to do really well and be able to have leverage. And even right now, we're still making offers on properties. They're very low offers, but at least these real estate agents and the sellers know that they have an opportunity even to come back to us in the future, especially if there's more turmoil in the real estate market. You guys want to right now get out of every consumer debt, and there's going to be strategy for that as well, because we're going to want to be able to take on debt in the future as well when we get prices of investment properties super low. So we want to get out of consumer debt. All that's doing is eroding away money that you could be stacking anyway for this opportunity that I foresee. So get out of consumer debt. Get rid of if you're financing boats and everything else, get rid of that stuff. It's only hurting your opportunity to stack cash right now. And also, when you guys go to get financing, it's going to hurt your debt to income position, and it'll negatively affect you guys there. Budget, this leads me to my next thing: budget and reduce expenses wherever possible. So if there's things that you're paying for that you don't use or don't need, just get rid of it. It's every dollar that you guys are saving, because it's not going toward a subscription of some sort, is only going to benefit you guys. Housing expense, right now, if you're house poor, meaning it's struggle to pay your mortgage and everything else, and you have an equity position, you might want to consider selling it. Also, I talk about house hacking on videos on this channel. Is there anything that you can do to house hack? Can you rent out a garage on your property? Can you rent out even some land on your property? Can you rent out any kind of bedrooms or a shed or whatever, bedrooms to maybe a good family friend? If things are extremely tight, does it make sense to get out of your lease right now and go and share the expense with a friend or a family member and move in together? I think a lot of people are doing that right now. I'm hearing more and more people on this channel that actually are saying that they're living in an RV on their kids' property, which I think is awesome. You spend more time with your family, and also it's just, you especially if you're retired and everything else, your cost of living is super cheap and you're able to stack more money. Another thing too is build your credit. Lenders are going to get it's going to be more and more difficult to get financing, and lenders are going to be way more selective. So the higher the credit you have and the more money in your bank account and the less consumer debt you have, the better position you're going to be in when we're able to go in and buy houses super cheap and get financing, take debt on these houses. And yes, people are like, well, at that point in time, interest rates could be 10%. And I say this all the time. I would rather pay a lower price for a house with a higher interest rate than vice versa, paying basically a high price for a house and say 6.18%. I'd rather pay 10% on a house that I bought, half the price, a lot cheaper. So I think that if you guys are getting properties at that point in time, then you have an opportunity in the future when real estate goes back up, which it will. Then you have the option to refinance into a lower rate because rates will come down. I mean, it's just the cycle. These are all cycles that, people that say that, we had a lot of comments on videos that I've done where people were like, the housing market is not going to crash. There's no way, all this. And I'm like, it's just look at history. It's the cycle thing. And unfortunately, the Fed and our government really put us into a situation where shit's going to get bad because they put so much money into the system, and they're buying $40 billion worth of mortgage-backed securities. Now they have to pull all that money out. They have to do quantitative tightening. There's so many things that they have to do that they need to basically contract the economy because it got out of control, and we're seeing it with inflation. I'm telling you right now. So I'm starting to learn about subject to properties. The point I'm making is always be a student. I want to always be continually learning about real estate, about YouTube and other things that I'm interested in. Right now, build your skill set. I mean, there's so much free information on YouTube and everywhere else that you guys could be just honing in on skill sets and learning something new. That's something that it can't be taken away from you. It can't, inflation's not going to hurt that. There's nothing that's going to be able to, there's nothing negative of learning new skill sets and honing in on that. So that's my biggest recommendation is, learn new skill sets. If you guys want to be real estate investors, there's so many different ways of buying real estate. Also, not just subject to, and I've already bought properties in the past where I got owner financing. I got the sellers to hold paper, competitive rates. I at the time overpaid for the property, but I got my rates in terms that I wanted. So learning all the different ways that you guys could buy real estate is only going to help you guys in the future. And then there's other ways of buying real estate with no money, where you're not necessarily buying real estate, you're buying the contract and you're flipping the contract to an investor that's lined up, that you have lined up. So, wholesaling contracts basically, and you can make the spread on that. And there's hone in on your skill set, guys. Side hustle. I talked about in another video, not just side hustles, but if you guys are trying to get into real estate, you've never really been in real estate before, see if you can work a side hustle in the construction area or the real estate area of some sort. So you guys can get a more of an inside look and learn from other professionals. If there's somebody right now flipping homes or building homes, see if you can go work for them or be an apprentice. I know some people that actually will work for free to just learn from people doing what you probably want to be doing in the future. So get a side hustle, and the side hustle also can just assist in stacking more cash. That's just going to start to stockpile. You stack this cash, you forget that it's even there, put it in a different account, and it's just going to be ready for you for when the time is right, which leads in my final thing is stacking cash. I mean, it all coincides with keeping personal expenses low. I want you to be financially free. And how can you do that? You can eradicate all of your personal liability, eventually become mortgage free on where you live. And it is life-changing. So if you guys want to learn more about that kind of stuff, that kind of financial behavior, consider subscribing if you're not a subscriber already. And I think I've taken up most of your time. I see a lot of comments in here. I really appreciate it, guys. Appreciate you guys being with me here today. But I got to run. I got to get on the beach today because I'm looking a little pasty. Thanks a lot for being here, guys.